Hello all, welcome to the TLC series. In this series, we will look at modules describing the trade life cycle. Let's begin this module with Introduction to Trade Life Cycle. At the end of this module, you should be able to define trade life cycle, mention the role of front, middle, and back office, name the stages of trade life cycle, illustrate how the trade flows between the intermediaries. Let's look at what is trade. Trade is a process of buying and selling of securities between or through different market participants. Let's look at what is trade life cycle. Trade life cycle refers to the sequence of various activities involved in movement of financial securities or cash between the buyer and seller. Let's look at the roles of front, middle, and back office. There are three main groups: the front office, the middle office, and the back office. The role of front office is to earn revenue, researching investments, trade securities, or directly managing assets. The role of middle office is responsible for ensuring that the deal negotiated by the front office is accurately booked, processed, and paid for. In addition, the middle office supports the front office in the areas of technology, compliance, law, and risk management. The role of back office is to support the trading and accounting groups with pricing settlements, cash, and collateral management, and other similar tasks. Name the stages of trade life cycle. Trade life cycle has different stages by which a trade flows through. These detailed steps are from the point of order, receipt, execution, and settlement of trades in a systematic manner. In other words, it is regarded as a series of logical steps, which are represented in such a manner where the trade is allowed to go through, keeping track of its related objective and importance. Let us now look at the stages in trade process. Pre-trade stage. Marketing executives from investment banks, brokers, and dealers introduce various financial products and vehicles to clients. Retail investors, or institutional fund managers, survey the market and find the most suitable and competitive products. Trade execution. After the survey or research, a buy order or a sell order is placed, and the orders are matched, and then executed. The completion of a buy or a sell order of a security is known as trade execution. Trade capture. After trade execution, the trade is booked in the front office system, middle office risk management system, and back office system. Trade validation and confirmation. Back office validates trade attributes and confirms trade settlement. Risk management checks the valuation, risks, and limits. Trade settlement. Any fee or premium needs to be settled. For a periodic cash settlement trade, such as interest rate swaps or bonds, there is a process of simultaneous exchange of cash between parties at each payment date. Debrief. Here, we come to the end of this module. Now you should be able to define trade life cycle, mention the role of front, middle, and back office, name the stages of trade life cycle, illustrate how the trade flows between the intermediaries.